What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And again, we are almost at 10,000 subscribers, and you guys are amazing. I cannot wait to celebrate with you guys once we reach 10,000 subscribers. That'll probably come in the next month or two, hopefully in the next month or two. So with these high-yield dividend stocks that I'm buying, so far so good. Again, there's always a risk with high-yield dividend stocks, you know, with dividend cuts, potential dividend cuts, and seeing things happen. So I'm going to explain to you why I'm buying them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these stocks out right now. So here's a real estate investment trust that I have posted videos on before. AFC Gamma, sitting at 1754. Dividend yield of 12.77%, PE ratio 8.87, average volume 198.55K, market cap 348.31 million, year range 1490 to 2550, day range of 1751 to 1798, and its previous close is 1775. So let's check these guys out. AFC Gamma is a leading provider of institutional loans to high-quality cannabis operators nationwide in all aspects of production, cultivation, processing, and distribution. We offer loans and related facilities generally secured by substantial assets such as real estate, licenses, and cash flow. The years of combined lending expertise and real estate experience, AFC Gamma's principles are now focused on exponential growth of the Mary Jane industry. So we're going to go over these guys a little bit financially, but we need to understand their philosophy and what sold me on these guys. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. So AFC Gamma is a real estate investment trust which gives investors access to income-generating commercial real estate investments. Not only is a real estate vehicle appropriate for a real estate lender, but a REIT offers investors several benefits. It is income-oriented, with the REIT participates eligible for a steady stream of distributions, and since REITs earn their tax exemption by distributing at least 90% of their income to shareholders quarterly and a 20% qualified business income deduction, REITs can generally generate more higher yielding taxable cash flow to their investors. So, a few things that I want to point out. So, their focus is rigor, partnership, and growth. So this is transactions 15.8 billion, 483 million deals committed. So here's another thing. United States retail Mary Jane market is expected to generate between 22 and 26.4 billion in total sales in 2021. The annual U.S. retail cannabis sales were projected to rise between approximately 20.9 billion and 47.3 billion by 2017. Now, I got to make sure I'm just going to say Mary Jane because I don't want to get flagged for anything. So the rising demand for consumers, key market drivers, market opportunities. So there's a lot of information that they provide. So this is the thing that's very excited about these guys. So I'm going to go over their revenue and their dividend history. So here's their revenue in June, 8.10 million. Operating expense 2.99 million, net income 4.63 million, earnings per share 34 cents. So you're seeing a lot of growth. Revenue is up 9.96 million September 2021. Net income went up, net profit margin went down. Again, these guys are kind of new, so there's going to be little ifs and what ifs and a lot of nerve-wracking things in the beginning. December, revenue jumped up, operating expense, net income 7.04. So you're seeing a jump. And then 1603 million in revenue. Net income went up 10.16 million. Net profit margin 63.39. Earnings per share 0.52. So that went up. And then June, the revenue was 18.31 million. The operating expense 5.79 million. Net income 11.35 million. Net profit margin 61.99. The earnings per share was 0.57. And then annual income statement, it went up. Revenue went, whoo, look at this, 199.25%. Revenue was 34.36 million. Operating expenses was up 152.14%. Net income went up 102.85%. So again, I really like these guys. This one's a major risk, but I'm going to take the risk. Now we're going to jump to their this other article by MarketBeat. This was very interesting. So I want to go over this article on MarketBeat. AFC Gamma saw a large growth in short interest in August. As of August 15th, there was a short interest totaling 256,000 shares, a growth of 17.5% from July 31st, total of 217,800 shares. Based on the average daily trading volume of 161,600 shares, the days to cover ratio is presently 1.6 days. Approximately 1.8% of these shares of the stock are sold short. So again, these guys are new, and this is very exciting with the way things are going. So I'm loading up on these guys, and I'm going to tell you, I'm buying them out. This is very exciting, and I'm not trying to pump a stock or give financial advice. I like this, and I provide my rationales as to why I'm buying this real estate investment trust. So let's check this out. And again, these guys are so new. So I'm on Zacks.com. This is in 2021. It was 38 cents. Then in 2022, it jumped to 50 cents, then to 55 cents, then to 56 cents. Now, the payout ratio is high. It's 99%. Number of dividend increases in the last 5 years is 4. Annualized dividend growth in 5 years, it's not available. It's brand new. So if you bought one share, it made $224 with a 12.62% dividend yield. This is a huge risk. I'm going to tell you, this is probably one of the riskiest dividend stocks that I'm buying, especially mortgage-backed real estate investment trust. But I'm going to show you a more stable mortgage-backed real estate investment trust that I'm loading up on. And let's check this out. You already know, Arbor Realty Trust is sitting at $14.98, a dividend yield of 10.41%, a PE ratio of 8.34, average volume 2.15 million, the market cap 255 billion US dollars. Year range is 1218 to 2074. Its day range is 1498 to 1538, and its previous close is 1526. So these guys are a mortgage-backed real estate investment trust that have done very well against the S&P in the past 5 years. Dividend growth is solid and the revenue is solid, so I'll go over that real quick. So this is in millions of US dollars. There's a huge jump in revenue, which brings these guys to be a very attractive mortgage-backed real estate investment trust. 2015 it was 142, 2016 213, 2017 346, 2018 484, 2019 535, 2020 603, and then 2021 799. Now this appears to be, again, no financial advice is given in this video or my whole YouTube channel, but these guys appear to be the best mortgage-backed real estate investment trust, which I absolutely love. And the revenue is amazing, and the dividend history is even better, which I'll go over, and I'll show you one of my goals that I have with Arbor Realty Trust. Let's check that out. So if you look at my previous video I posted, one of my goals is to get to 400 shares, and it's actually less right now. And I actually am buying shares after this video. And if I had 400 shares, it'd be $6,024. And then if I had 400 shares times 39, that would be $156 per quarter. Then if I had 156 times 4, that would be 624. So I hope I got my math right. You can correct me if I'm wrong. But you're seeing the dividend growth and why one of my goals is to get to 400 shares. So $624, I mean, think about that. I'm just going to calculate this on my phone. 624 divided by, let's just say 16. 39 shares. Is that right? 624. Yeah, so that's a lot of shares that I'm getting just by doing that. And I'm going to calculate it one more time just to make sure I'm doing my crossing my T's and dotting my I's. So yeah, that's 39 shares pretty much. So of course, so here's my goal. So if right now it was 1506. Now it's actually down because I just did a calculation this morning. So if I had 400 shares, that was $6,024. So 400 shares times 39 cents would make 156 quarterly. The 156 times 4 quarterly dividend distributions is 624 a year. So think of how many shares I would be getting each time when I'm reinvesting these dividends and just leaving it alone. And again, these guys are such at a discount. How can I say no? And I'm actually going to be buying more shares this week once my paycheck comes in. So let's jump to the final dividend stock. My final dividend stock I'm going to go over is Altria. Its dividend yield is 8.29%, a PE ratio of 46.65, average volume 6.48 million, market cap 81.69 billion US dollars. Its year range is 45.10 to 45.77, and its previous close is 45.71. So as you guys know, Altria is big with the tobacco industry. People are going to smoke. They don't care. They know about vaping. They know vaping's bad. They don't care. Okay, they can give you all the warning signs in the world that smoking's bad, but people are going to smoke and they don't care. And these guys are a huge sin stock, and dividend investors absolutely love buying the stock for the dividend income. And if you look, it's not doing too hot against the S&P. So this really isn't Roth IRA material in my book. Because when I think of a Roth IRA or a traditional IRA, I look at the price per share increasing over time. I look at them keeping in line or beating the S&P and hiking their dividends over time. And of course, bonus points are always stock split history if they have a significant stock split history like Starbucks. So these guys are down, they're sitting at 45.35. And I'll show you how they're doing revenue-wise and dividend-wise. And the recent dividend announcement is beautiful. So this is in millions US dollars. 2015, 25,434. 2016, 25,744. 2017, 25,576. 2018, 25,364. 2019, 25,110. 2020, 26,153. And 2021, 26,013. So these guys are a company that adapt to smoking, vaping, and potential Mary Jane business. I really don't want to go. I got to be careful when I say that. I don't want to get in trouble, but they have a pretty decent revenue and their dividends are very attractive for dividend investors. Let's go over that. And this is why dividend investors love Altria. Look at this dividend growth. 2013, 44 cents, then to 48 cents, then 2014, 52 cents, then 2015, 57 cents, then 2016, 61 cents, then 2017, 66 cents, then 2018, 70 cents, then 2019, 80 cents, then 2020, 84 cents, in 2021, 86 cents, and then 2022, 90 cents to 94 cents. So the dividend growth in 5 years is not bad, 6.36%. Number of dividend increases in the last 5 years is 7. Payout ratio looks pretty decent at 77%. It's not 80 or above. Is this dividend sustainable? I don't have an answer for that. I'm just going to take a risk. I'm not giving financial advice. I like their dividend trend, so we'll see what happens. Their revenue is slightly increasing based on the trends and macro trends. If you bought one share, you made $360 with a 7.88% dividend yield. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a new video for you tomorrow. And I'm going to try to squeeze in a lot of videos before I start my rotations next week. This is Dark Dividend. You guys have a great Tuesday.